Okay, continuing on now with our chapter 8, we're looking at number 8. This one is a great one to look at because it's going to help you as you get into the bank reconciliations. So once you're finished with this one and you do the check my work, you make sure it's good, take a picture of it so you have an easy reference because it's going to help you to know where things go, whether it's the bank side or the book side, whether it adds or subtracts from it, and whether you're required to do a journal entry. So let's take a look at this one. So it starts out and it says interest on cash balance. All right, so we have to think about this. Okay, who knows that there's an interest on the cash balance? Well, the bank does. The bank is the one telling you how much interest you've earned. So if the bank already knows, that means they're telling us. So we're going to be doing a book adjustment for that one. So we're going to key book entry on this side. All right, so because it's interest that's earned, that means we're going to be adding it to the book side. So it's interest we've earned, which is an addition. Anytime we have a book side entry, that means it's something that we're adjusting to our books. That means we need to do a journal entry to adjust those balances on our books. So entry required is yes, because it's a book side entry. If it's a bank side, then we do not do a journal entry. All right, let's look at the next one. Bank service charges. Again, is the bank aware of the charges or were we aware of the charges? Well, if the bank is charging us a fee, that came from the bank statement that they sent. That's what tells us how much of a bank service charge there is. So that means that if the bank statement said it, we didn't know about it yet. So that's going to be a book side adjustment again. A service charge is something we're paying, so that's going to subtract from our cash balance. And then again, because it's a book side, yes, we have an entry. Looking at the next one, minimum balance bank fee. That's another fee the bank is charging us because we have to, if we did not keep a minimum amount in the bank. So that's going to be a book side adjustment because we found it on the bank statement. They're telling us about it. It's a fee, so it's a subtraction. And because it's on the book side, yes, we are going to do a journal entry. The next one, outstanding checks. Outstanding checks means that we have written a check to someone and it has not cleared the bank yet. That means that the person may have received it, they may not have deposited it yet. It just has not cleared our bank, so it has not come out of our account in the bank side yet. But we know that we wrote that check, so on our book side, we already took it out. So this is a bank side adjustment. Outstanding checks is checks we wrote, that means we're paying something, so this is a subtraction from the bank balance. And because the bank side, no, we are not doing a journal entry. We already recorded that transaction when we wrote the check. The bank just hasn't gotten the check to clear it yet. So this is something we're going to subtract from the bank balance. The next one, collection of a note by the bank. That means they collected a note receivable for us, so someone paid them electronically. That means that the bank statement told us that, so that is a book side adjustment. They collected money, so that adds to our balance. And because it is a book side adjustment, yes, we are going to do a journal entry. The next one is NSF checks. NSF check stands for insufficient funds. That means that someone wrote us a check when we deposited it. It was presented to that person's bank and there was not enough money in there to pay us. So they're sending the check back and saying this is no good. So the bank statement is telling us that it's going to be a book adjustment. We had already deposited it, so we would have added it. Now they're saying that check is no good. So we had to subtract that from our balance because that check is not good. And again, it's a book side adjustment, so yes, we will do a journal entry. The last one is deposits in transit. So for here, we have deposits that we made, but it has not been posted to the bank statement as of the statement date. So that means that our book side, we keyed in a deposit. The bank side needs to be adjusted for this. This is a bank side adjustment. A deposit is going to add to it. And because the bank side, there is no adjusting entry. Deposits in transit happen because of timing. Same thing with outstanding checks. It's just the timing has not processed the deposit yet. So an example might be maybe the bank statement is on the 31st. We go to the night deposit on the 31st. So we put it in there on the 31st, but the bank's not going to process it until November 1st. So they're going to run the statement as of what happened on in this case October 31st. So that's going to be a 1 day lag, and it's just timing. But that means that we're going to do the addition to the bank side. We already knew we made the deposit on the book side. The bank side is where we have to adjust that one. So once you're finished, go ahead and hit check my work. Again, take a picture of this one if you want to, so you have it as a quick reference when you're actually preparing a bank statement. And we will do some of them, and then we're also going to leave some that you're going to do on your own. So let's look at number 9. This is an example of a bank statement. We are not going to do this one together because I want to do one together that also has the journal entries. So we're going to skip this one, and this will be one that you guys can go back and do as extra practice. Again, it's giving you the cash balance and the bank statement balance. The cash account is our book balance. Bank statement is the bank statement balance. And then it gives you transactions you're going to go through and reconcile to make sure that when you get down to the bottom, that adjusted bank balance equals that adjusted book balance. Because you'll notice in the beginning, these two numbers don't equal. And we need to reconcile to make sure that the cash we have in our account reconciles to what we say on the bank statement. And again, it's notification of fees and collections and also timing of outstanding checks and deposits. So those all factor in. So we're going to skip over number 9, and we are going to do some practice with bank reconciliations, but I'm going to leave this one so you have something to go back and practice with. All right, we're going to look at this next one where it's doing a bank reconciliation. And then if we look at the next one, number 11, this one has the journal entries that go along with it. So number 10 and 11 go together. We're going to do those together right now. And this is for Organic Food Company. And again, it gives us the cash account balance, which is the book balance. We're going to put that over here where it says book balance on the right-hand side, $5,500. Let me try that again. All right. And then it says the bank statement has $5,160. So we're going to key in $5,160. And we see they don't equal. So that means we have some reconciliations we need to do. And they give us 5 different transactions here that we need to reconcile. The first one, it says August 31st, cash receipts of $1,240 were placed in the bank's night depository after banking hours and were not recorded on the August 31 bank statement. The bank statement shows a $120 NSF check from a customer. The company has not yet recorded the NSF check. C says outstanding checks of August 31, total $1,120. D, in reviewing the bank statement, an $80 check written by Organic Fruits was mistakenly drawn on Organic Foods account. And then E, the August 31 bank statement lists $20 in bank service charges. The company has not yet recorded the cost of these services. So we're going to look at each of those and decide whether it goes on the bank side or the book side. So the first one is a night deposit that was after banking hours, and it was not recorded on the August 31 bank statement. So that's going to be a deposit in transit. That's going to be an adjustment on the bank side because we know on the book side we recorded a deposit. It's just a timing for the bank to be processing it, and because we did it after hours, they're going to process it on September 1st. So we're going to add over here on the left deposits in transit, and it says deposit on December 30 or August 31st, and that's going to be for $1,240. We can see that we're still not balancing. If we look at our balances, they still don't equal. So we know we have some more reconciliations to do. So we're going to go into B. B says the bank statement shows a $120 NSF check, which means that a customer wrote us a bad check. If we look back to our number 8 that we did, we can see that NSF checks are book side adjustments, and it's going to deduct because the customer didn't pay us. So we have to subtract that from our balance. So, and that's going to be $120 that we're going to subtract from that balance. If we look at C, it says outstanding checks as of August 31, total $1,120. So we know we have outstanding checks that we need to subtract from our bank side balance for $11.20. In D, it says, in reviewing the bank statement, an $80 check written by Organic Fruits was mistakenly drawn on Organic Foods account. So this case, this is looking at two different companies that are similar in names, and what happened is the bank made a mistake and they took it out of the wrong account. So this is a bank error because we are Organic Foods and they took it out of our account, but it should have been Organic Fruits. So in this case, they need to add back in money for an error, and it's going to be called a bank error, and that is for $80, and they're going to owe us back that money. And then the last one, it says the August 31 bank statement lists $20 in bank service charges. The company has not yet recorded the cost. So the bank is charging us a fee. So that's going to be deducted from our side. It's a bank fee, bank service charges, and it is for $20 that we're going to subtract from the book side. So here we can see that after entering in A through E, we do have a balance that equals the adjusted bank balance equals the adjusted book balance, and that's what we want to see. As far as the second part, now we have to make sure that we do our journal entries for anything we adjusted on the book side. Remember, we don't adjust anything on the bank statement side. There's no journal entries for the bank statement side. It's only for the book side. So if we look at the book side, we see that we have two deductions. Again, we're adjusting our cash account here. So anytime we're adding, that means you're going to be debiting cash because you're adding cash, increasing it. Anytime you're deducting, you're going to be crediting cash. So we know here we have two credits to cash, and then we have to figure out what the debit side is to those. So let's look at number 11 to do those entries. So again, we're doing the entries, and it says here that if there's no entry required, that's what we key in. So our first one was for the night depository. That was on the bank side, so there's no entry required here. So that's what we're going to enter. For B, we had an NSF check, so we know that we're paying out cash of $120. Well, we have to look at what, let's see if they give us a name. They didn't tell us a name here. So we're going to be looking at the different accounts we can choose from. Let's see what they give us. Just to kind of look. Basically, they're going to be owing us money again because we did not get to collect from them. So we're going to put that into accounts receivable, and that's going to be for $120. That means they're going to owe us that money again. So we have to put it back on the books because they did not actually pay it, and it comes back out of cash. Going into number 3, that's going to be a deposit in or outstanding checks, which is on the bank side. So there's no entry required for that one either. The next one, this is a bank side. Remember, it was a bank error. So that means we would have no entry required because we only adjust for the book side. So now we have a charge. So we're going to look for expenses. And I believe we're going to use miscellaneous expenses. And then again, we're going to be crediting cash. And that was for $20. I'm going to hit check my work on this one just to make sure it comes, that all of them show properly, the A, B, C, D, and E. And we can see here that that's what we should have used the accounts receivable. And then if you don't have a clear expense listed, you're going to be using that miscellaneous expenses. So that takes us through number 11. We are at the end of this video, and we will continue with the next ones in the next video.